Hey everyone, ChatGPT has kicked off so much investor hype for artificial intelligence. It's no surprise that investors want to know what's the best AI stock to buy right now. Well, in this video, I'm going to compare three of the most popular AI stocks to answer which one is the better buy. I'm going to put together Tesla versus Palantir versus Nvidia and answer which one I think is the better AI stock to buy for 2024 and beyond. So let's jump right in.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first metric I'm going to compare these three AI stocks on is revenue. But before we get into revenue, let's look at the total addressable market for artificial intelligence. According to Statista, the total addressable market for artificial intelligence is expected to grow to $1.85 trillion by the year 2030. That would be up significantly from the $207.9 billion in 2023. Artificial intelligence is popularized by large language models like ChatGPT, but there are more applications like driverless car technology, recommender systems, and more. The companies that stand to benefit from the growth in this AI surge is companies like Amazon, Nvidia, Alphabet, Microsoft, and more. Investors getting in today could realize exponential returns from investments that capitalize on the growing effectiveness of artificial intelligence. So now that we know the scale that AI is expected to grow to over the next several years, let's look at how these companies have performed so far. And clearly, you can see Nvidia exploding 205% revenue growth in its most recent quarter. Nvidia, the major one out of these three to experience the initial surge in AI spending. Now, Palantir and Tesla could follow, but for now, Nvidia is leading the pack in terms of growth in AI. Of course, Palantir is offering enterprise AI services that could likely grow several years, and Tesla, of course, with driverless technology, that's going to be huge if it can get this right, if it can get it fully implemented, legalized on roads across the world. That could be massive for Tesla in the long term. The difficulty in that is twofold. Number one is actually developing the technology, the skill to offer that service, the driverless car technology. And then the second part of that is getting it legally implemented. It's going to be difficult to convince politicians and states and countries to allow driverless cars on the road. We've already seen difficulties in several states in the US, making it difficult to implement driverless cars on the road. So, two things Tesla needs to overcome to deliver that. But if it does, wow, it's going to be huge. The next metric I wanted to compare these three stocks on, is operating profitability. And I looked at the trailing 12-month operating profit margin. And again, Nvidia with a considerable lead across the board at 45.94% operating profit margin, more than four times the next best in Tesla at 11.22%, and Palantir at just 1.71%, although Palantir is making very nice progress upward in operating profitability. Nvidia has held this lead for several years, so it's not a fluke that Nvidia is in the lead in this metric. Similarly, the next metric, cash flow from operations to sales, measures how much the company turns sales into cash flow from operations. So for every $100 in sales, Nvidia turns $42 into cash flow from operations. Palantir, the next best at 23, and then Tesla in last place in this three with 12.68%. This is, again, in favor of Nvidia by a considerable margin. So far, Nvidia has topped all three in the three metrics we've considered so far. The next metric I'm looking at is return on invested capital. This measures net operating profit after taxes compared to the capital invested, how much money you used to run your business. So it excludes things like cash and short-term investments, which you're not employing in your business. That's just something you're keeping on hand just for safety reasons. So this measures this part of the business. And again, Nvidia in the lead at 52.18%, besting Tesla at 21.2%, and Palantir coming in third place, but again making considerable progress upward for Palantir Technologies. The next metric, return on assets, is similar to return on invested capital, but this time it measures against all of the assets on the company's balance sheet. It doesn't exclude any asset. And according to this metric, again, Nvidia 41.09% compared to Tesla at 12.59% and Palantir at 3.95%. Across the board, Nvidia taking the win in 1, 2, 3, 4, 5 of the categories we looked at, and by a considerable margin. Palantir was the best in terms of making progress in improvement. The slope of its improvement is better than the others. However, it is not yet to that scale where its absolute numbers are as high as Nvidia's in several of these metrics. So across the board, 5 out of 5 Nvidia for the win. The last metric we're going to look at is valuation. And I chose to use the forward price to earnings ratio. The price to earnings ratio is an important financial metric I use to determine which stock is more expensive or if a stock is too expensive. Let me show you this example here. I have two stocks, one trading at a market price of $100 and one trading at a market price of $12. The one trading at a market price of $100 has an earnings per share of $2.58, while the other has an earnings per share of just 11 cents. When we look at their price to earnings ratio, the one trading at a market price of 100 is trading at a price to earnings of 38.76, while the one trading at a market price of $12 is trading at a price to earnings of 114. So in this example, the one trading at a market price of 12 is actually more expensive because I'm paying 114 times earnings to purchase this stock. That means if the company was to pay me earnings per share every year as a dividend, it would take 114 years for me to receive my money back. Whereas the other stock, it would pay me back in 38.76 years. Now, there's a lot more to think about in this equation, but to simplify, that's an example that shows you why a company with a market price higher can actually be cheaper than a company with a market price that's lower. And according to this metric, Nvidia is the cheapest out of these three stocks. That was surprising to find out, right? We saw Nvidia 5 out of 5, the best out of all three companies, but it's selling at the cheapest valuation compared to Nvidia, Palantir, and Tesla. Palantir, the most expensive at 46.67 forward PE. Tesla, the next cheapest at 42.55 forward PE. And then Nvidia at the cheapest, a forward price to earnings of 27.73. So if I had to pick one of these three excellent AI stocks to buy today, I would pick Nvidia. And the choice was relatively easy because what we saw, Nvidia 5 out of 5 better across the board, and it's selling at a cheaper valuation. Now, all three of these are excellent AI stocks, but Nvidia with the cheaper valuation combined with the excellent performance makes it an excellent choice. So for that reason, I would pick Nvidia as my best AI stock to buy in these three choices. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.